ladies and gentlemen. This is Nuke coming at you with another episode of Day Trading with Nuke. Today's watch list is for Tuesday, December 4th, 2018. And we are going to roll right in here. We're going to make this off quick. I got kind of a few of them up here. It looks like we got 7 on our watch list for today. We're going to start off with Apple. Actually, let me show you this one too. Apple's been dropping off. We had a decent little fall yesterday, and then it kind of came back up, and then we're consolidating, coming down again. On the longer term chart, we're holding a nice line of support here. So, but throughout the night, it's been selling off. Not sure exactly why that's going to happen, but I expect, because where we're sandwiching in between the 9, the 20, and the 50, that this is going to result in some consolidation. And if the SPY has got some action to it, I'd expect to see this thing pop on up over. And if the SPY is selling off again, then I'd expect it to come back down and fill this gap up that we had the other day. Eek. Good Lord. That's what happens when you get in too close. And that gap up, yeah, we'd probably come down around the 179. Oop, let's see. 179, maybe 177-ish mark. Somewhere up in here. Alright, what does that look like on the Fibonacci? High, daily pre-market high is 184. The stock opened at 181 today, and currently it's projected to go down as far as 176. So, yeah, if it can get above this and hold the early morning break line, expect to see it come to the high side. But if it keeps selling off like it is, I wouldn't be surprised if this thing quite quickly drops down around 176. Alright, we're going to start doing these with a little less details and see if y'all like that a little better. NVDA on the long term has been dropping off. The last week it had a really nice cover pop, and then yesterday morning it had gapped up, and then it filed down to fill that gap, and then all morning long it's been continuing into this wedge from the older resistance and the newer resistance, so it's triangling out really nice here, wedging out. Expect to see this thing could go either way as it bounces around and gets in here. The morning started off at 168, pretty much on the dot, so anybody's guess, but mine would lead more towards consolidating, because if you look on the 4-hour chart, we're still above the 9. And I can see this thing coming down and sandwiching in between the 9 and the 20 and 50 here. That's just my opinion. It could go either way. If it breaks to the high side, expect that the 172, which puts your resistance up here, could be quite valid. And on the low side, yeah, actually the 164 is a little sketchy. I would say probably 163. Yeah, 164 ain't too bad. That's a 10-cent difference. 163.90s, 164s. I expect that's going to move a little bit. Alright, next up is going to be Facebook. Who like Facebook? Alright, Facebook has been dropping off, and then it had a nice little cover pop. What's that look like on the 4-hour chart? The 200's up above us. We're between the 9 and the 20. You see that cover pop, and then now we're sitting right here sandwiched between the 20 and the 9. This thing could actually catch some ground and take off. If that happens, somewhere right up here around the 143 is what I would expect on the high side. And if it breaks low, below the resistance, expect to see it test the 139. If it breaks through that, the next point of resistance we're looking at is right at about the 138. Alright, next up after Facebook is Baba. What's up with Baba? So, Baba's been on that steady decline, not quite as sharp as the other ones, and then it had the cover pop for 2 weeks. And then yesterday we had a gap up, and now it's been coming back down to fill that gap. Currently we're between, well, it ain't exactly the best support and resistance lines, guys. Baba's kind of been all over the place, but I would be shooting for this thing coming down a little bit more. Let's look at that really closer here. All of the EMAs are stacked up in a bullish pattern, 9, 20, 50, and 200. So if it can manage to get above this pre-market support, and break this pre-market resistance, I would not have a problem saying that BABA could easily jump back up to the 165 and possibly up to the 168. On the other hand, if it comes down low, this 162 is only fairly solid support for the time being. You can see it was really trying hard to get there yesterday. If it breaks through that, expect to see resistance could drop all the way down to 161-ish. So this thing could potentially have about $4 worth of movement in it. So good idea to keep an eye on it for today. Next up, RH. I started to say Robinhood. That is Restoration Hardware. It's kind of been all over the map. It took a dip with the other big ones, but then it gapped up. And that gap up was serious. Man, oh man, I wish I'd have caught that. But I couldn't. It was aftermarket trading. But that was a hell of a gap up. From 123 all the way up to, well, let's see, 153. Good Lord, $30 gap up. That had to be some kind of major shares changing hands or buyout or something. I don't know. I didn't even look at that. All right. But currently it's trying to fill that gap. That's going to be a hell of a gap to fill. So keep your eyes on it. The Fibonacci's aren't going to help us here, guys. There's no damn way this thing jumps up to 180 or down to 94 in one day. So I would expect to see some kind of consolidation closer to the price that it opened at, which is the 147. Maybe you see it drop. I don't even want to say that, guys. You know, just keep your eyes on it. All right, next up is going to be DGAZ. One of the ones that I really don't like to trade. It's been falling off. It had a little bit of basing. I just didn't like it, guys. You've got the 9 below the 20, below the 50, below the 200. So it's steadily been dropping off. But it does show signs of basing. And then yesterday it had gapped up pre-market. And today it gapped back down pre-market. Basically filling that out. So let's see what that looks like on the Fibonacci on a longer term time trend. This 100% down falls at the 49.32. What if we go up a little bit? Yeah, here we go. This is, yeah, that's not reasonable. Let's see. How about this one? Yeah, right here. 47.16. So maybe 47.16 on the low side. If this thing really tanks, currently the Fibonacci has it down here at the 41. But, I don't know if it's got that much to it. That's a lot of damn movement. A lot of movement. 45 would be more expected. 45 if it holds this pre-market resistance and breaks down here. But if it does get some guts to it and breaks up above, with the way it's been selling off, yeah, I just don't know. Maybe 52-ish. I don't know about what it would hold. Like I said, it's not something I like to fool with. It's kind of all over the place. And last but not least, my devil darling, AMD. She had came up, fell off the edge of the cliff, and then she started consolidating. Yesterday, she broke out of this consolidation phase. So, I probably should have drawn in a little more consolidation here. Like this. So, we're still not in that range. That would be well below us here. So, with that gap up we had yesterday, just incredible. I think this thing is more headed to the upside. I can see it consolidating back down to the 23.29, and then if it can manage to hold this pre-market support, expect to see this thing easily come back up to the 23.74. And I don't know if I trust the fibs on this one, saying it can get all the way up to the 24.50. Let's look at the 4-hour chart. Let's see. Yeah, possibly. But I don't see it jumping more than that, the 24.50-ish area. And I likewise, the 22.47 coming down to that range, actually probably closer to 22.69, 22.50-ish. I would see this as a much more likely area if it respects this resistance and wants to come down. That's probably a very likely spot, is at 22.69 here. Alright guys, that's all I got. I got it to you in less than 10 minutes. I'm trying to make them a little bit quicker so I can process them faster. I'm going to get this thing on the road and hit that like button, hit the subscribe button. Leave me some notes in the comments section. I'll see you later.